Hello everyone. Welcome to market update for May 6th, 2021. Let's get started. Okay, so taking a look at the S&P 500, just in the daily chart, we can see we're still in this bullish channel. We haven't broken down from these major resistance lines. Therefore, we're still bullish on the stock, on the S&P 500 and the market in general. If we look at the 1 hour chart, we can see that it has dipped below, but it found support around the 4,011.20 mark, and then now we're kind of back in this channel. Still bullish on the S&P 500. Even though it has reached our Fibonacci retracement, we're still trading above it. I wouldn't be short the S&P 500 in this market right now. Moving on to the NASDAQ. So we can see that the NASDAQ has broken out from the major resistance here. It came to support, it went up, and then it kind of broke down, and now we're testing resistance again. So you can kind of expect this to kind of roll over again, or it can kind of break through. But again, right now it has broke this major resistance over here, and now the NASDAQ is essentially fighting upstream. And if we can kind of look at the components in it, as we said last time, Google, Amazon, Apple, they all had killer earnings. They're all doing exceptionally well, but those stocks haven't rallied, and that's mainly because in 2020 these stocks had outperformed the market, and it had Apple alone added 1 trillion to its market cap. So yeah, Apple is beating earnings, but how much of that is already into the stock? Unclear. It's already if you owned Apple, you've probably tripled your money by now. Let's say even before the coronavirus, guys, it was about 81. So yeah, I guess you kind of almost doubled your money. But if you bought down here, you would have doubled for sure. Anyways, okay, moving down up to the Russell. So if we kind of so let's look at the weekly chart. If we kind of look here, we can see that it's kind of consolidating. You see that? So it's kind of, we're in this triangle pattern. It's kind of consolidating, things like that. But if you kind of look at the daily, despite the S&P 500, so we saw the S&P 500, it's making new highs. This is pretty healthy. We're in this upward channel, but the Russell, it's not really in a channel. It's completely going sideways. So I personally wouldn't want my money, even though I do have some Russell 2000, but I wouldn't want my money going sideways. And I'll actually, if this can get up here and test resistance again, and it fails to break through, I'll be looking to exit my position because, looking at these charts, if I were to pick the S&P 500, NASDAQ, or the Russell, I would for sure pick the S&P 500. NASDAQ did really well in 2020. So if we could go back in time and go in 2020, I would be all over this. Later half of 2020, I would be all over this. And then now we can see the S&P 500. So it's very important. I just want to stress, the NASDAQ does not have anything that's performing good right now. So it doesn't have any financials. It has no energy. It has no industrials. It has no materials. If you guys look at the commodity markets, lumber, steel, all of these commodities are just making all-time highs every single day. Why that is? Well, it could be a multiple reasons. At the end of the day, we're analyzing price. The people who analyze the fundamental, it's all a story, right? Somebody can come and give me a story about, this is why lumber prices are going up. And then somebody can say, this is why lumber prices are going to go down. At the end of the day, it's a story. But what really matters is, where are people putting their dollars? And right now, people are bidding up, commodity prices. Some people say it's because of inflation. Other people say it's transitory. That's what Jerome Powell, the chairman of the board, thinks this is all transitory. Other people don't have that opinion. At the end of the day, we don't know who is right. It's very tough to predict the future. And anybody who tries to predict the future, at the end of the day, you can try to predict maybe a week from now or 2 weeks from now. But to try to predict 6 months from now or a year from now, you're kidding yourself. So we have to just, weekly, at least in my opinion, weekly, you can kind of predict a week or two in advance kind of by looking at the trends. So weekly, I would say you have to analyze price behavior, because that's where people are voting with their dollars. Everybody's trying to determine what something is worth every day in the market. So, we can look at the NASDAQ. The volume today was, 560, you can kind of see it here, was 562,000. So these are the people that are voting, and they're saying NASDAQ is worth this. And obviously different people have different voting powers. So if you're a hedge fund with, let's say you spend $3 million a day buying or selling stock versus somebody that has $1,000 Robinhood account, well, that person can vote with their $1,000, but it's not going to carry the weight. You're not going to move the markets. But someone with a $3 million or $50 million, they have bigger voting power. They can, if they have an opinion that the NASDAQ is worth less, then they can express that opinion more. And so, that's why sometimes I just see like some of these stocks get shorted to death, like Clover or, MVIS. And, you kind of wonder who's behind these moves. It's like, the thing is, if you get 1 million people on Wall Street Bets or 1 million people voting saying MVIS is worth more, you might get a price spike. But if another hedge fund comes in with a lot more liquidity and they drive the price down, a lot of people can just ditch their positions, and the hedge funds end up winning. So analyzing price is very important, and that's why we kind of do it every day. Okay, moving on to, so let me just finish the Russell 2000. So we are below the 50-day moving average, and we can kind of see that we came down here into support. So I draw these things beforehand, and it's amazing to me how much the market respects these resistance lines. It's like, to me, this whole thing is math, the whole thing is statistics, and the whole thing is data points. And you can say humans are the ones that are trading, but at the end of the day, 80% of trades, or if not more, is done by algorithms. So the algos are deciding what's happening. They're the ones with the liquidity. We have $50,000 accounts, $1,000 accounts, whatever, and everybody has different opinions, but you kind of need to see where the liquidity is. But so right now we're kind of below the 50 moving average. It really touched nicely into this support, and it was able to hold the support. I see the Russell moving sideways. So it could move sideways until we kind of get into this bullish channel again, and then maybe we can resume higher. But in my opinion, it's a waste of time to be involved in small caps and in the Russell 2000 right now. Okay, moving on to MVIS. We're below the 50-day moving average. I still wouldn't buy this. This is not a buy for me. We did spike above here. So I think it was on May 4th. So that would have been 2 days ago. We had like a middle of the day. It was like 16% jump. But then we're kind of right back down. We're not able to hold this 50-day moving average. We're coming lower. This kind of trend line is acting as support. So if you're a risk taker, you can kind of buy here, and then if it dips below, if it even breaks this, then you guys know, we're heading down here. So you guys can buy here. This is kind of proven to be an area of support, but to me, the risk reward is just not appropriate to get involved in here. We're below the 50-day moving average. Why do something risky when you can do other risky things that are more likely to be profitable? I'm not against risk, but I'm against risk that will make you money. Okay. GME, we have broken down. This is below the 50 moving average. Again, before, when we were up here, we had all these layers of support. It would have been appropriate to take a long position, but we broke through. And this is another one. Everybody has a different opinion, but we have to follow price. Please just do not get involved in a cult. Anybody that says gold is going to X or GME is going to Y. Some people are buying $800 calls. While it's kind of cool. I mean, for someone to be that confident and have that conviction and buy an $800 call on GME, that guy, he might be a billionaire one day, because this market does reward risk takers, and people who take outrageous risks like that, like buying an $800 call on GME, one day they will hit it big. But until they don't, they'll go to zero a couple times. Guess you're kind of just waiting for your day for it to happen, and the key is to not lose it when you do get it. Kind of like that Archipelago's Capital, Bill Huang. He made quite a bit of money, but he just kept taking more and more risk. Anyways, okay, so moving on to Clover Health. Again, below 50-day moving average. A lot of these stocks are just not attractive right now. So I wouldn't touch this. I wouldn't touch this at all. It is coming into support. So yeah, I mean, if you are a risk taker and you just want to make a little bit of money, you could buy this here and then maybe sell it the 50-day or sell it up here. But to me, there's just way too much resistance that is fighting through. If this breaks, we're headed down here. Anyways, okay, moving into Apple. This has been going sideways since September of 2020. So we're not making new highs. We're not above 137 or 144. We did come into this 50-day moving average, and the buyers did step in. And Apple, they're buying back a lot of their shares, so they're just removing the pie. But again, this is kind of moving sideways. If we're not above 137, there's better opportunities in the market. Let's look at AMC below the 50-day. It's coming into support. It has a lot of resistance. Similar story. I wouldn't touch this. The path of least resistance is down for these stocks. Okay, Tesla. So I kind of drew these channels here. So you can see this is kind of in February of 2020. So here we can see that we completely have been respecting these kind of boundaries that you could have arguably drawn back then. Here we kind of see that we're kind of extending from this bullish channel, and we did try to consolidate around here, and then we kind of moved lower. I guess if it comes down to its 200-day moving average or down here, you can think about adding to positions if you're bullish long term, but I wouldn't do this for a day trader or something like that. RKT. Okay, well, this is a very ugly chart. It's come down into support here. This is when they announced a dividend, and it kind of skyrocketed like 71% in one day. But anyways, this is below the 50-day moving average. Yeah, I don't know. I don't know why people are buying these stocks. In my opinion, if you kind of look at financials, like look at this. This is beautiful. If we just look at the weekly here, this thing is breaking out. Look at this base. This is 2007 and this is 2020. All of this consolidation, we've gone nowhere since 2007. And finally, we're breaking out and we're making new all-time highs every single day. This is the perfect stock to be in. You have to be in financials. And we look at energy, the XLE. Yes, we did dip lower, but we're able to quickly regain that 50-day moving average. And again, we're heading into kind of all-time highs. Materials, new all-time highs. We're keeping on trucking along. Industrials. In my opinion, this is where you guys want to be. You guys want to be in these names. You guys want to be industrials, financials. All these commodity prices are, keep going higher. So look into these sections of the market, and you could, if you guys want more risk and reward, you can find penny stocks. Find penny stocks in the financials. Find penny stocks in materials. Okay, if you guys want to play penny stocks that have high implied volatility, do it in the right sectors. In 2020, the right sectors were technology, but right now the right sectors are materials and industrials. Anyways, thanks for tuning in, and we'll see you guys next time. Cheers.